What if I told you that Bitcoin just hit a new all-time high of $93,000 and that experts believe that this is just the beginning? Well, today we're diving into Cathie Wood's bold predictions for Bitcoin, the impact of new regulatory changes, and what this means for your investments. So grab a coffee, hit that like button, and let's get started. First up, let's talk about Bitcoin hitting that impressive $93,000 mark. But what's actually driving this surge? Well, according to CoinGecko, Bitcoin reached an all-time high of $93,477 on November 13th. While it dipped slightly afterwards, it bounced back over $90,000 in early trading sessions of the 18th of November. So what's really fueling this momentum? Experts like ARK Invest's Cathie Wood, experts, depending on how you feel about that, attribute this rise to a combination of market optimism and significant institutional interest. Remember, right, Cathie Wood was one of the first public asset managers to gain exposure to Bitcoin way back in 2015 when it was just $250. Now, seeing it soar to over $90,000, she believes there's still a long way to go. But it's not just about the price. The growing acceptance of Bitcoin is as a legitimate asset class by major financial institutions is playing a crucial role. The mainstream adoption is attracting more investors, pushing the prices even higher. Now, let's take a look at Cathie Wood's ambitious predictions. In a recent interview with CNBC's Squawk Box, Cathie Wood stated that Bitcoin could reach anywhere between $650,000 in their base case and a staggering $1 to $1.5 million by their bull market case or bull case by 2030, which would just be absolutely mind-blowing. Now, these predictions aren't just wishful thinking. Cathie Wood and ARK Invest have been at the forefront of the cryptocurrency wave, advocating for Bitcoin as a new asset class. They believe that as Bitcoin continues to behave differently from traditional assets, it will become an essential part of institutional portfolios. Cathie Wood emphasizes that Bitcoin is not just a part of the global monetary system, but it's carving out its own unique space in the financial ecosystem. This distinction is attracting asset allocators who are keen to diversify their portfolios with digital assets that offer different risks and returns and have different return portfolios and profiles compared to traditional investments. Another critical factor driving Bitcoin's momentum at the moment is the anticipated regulatory relief from the new administration. On November 11th, Cathie Wood posted on X that defragging finance regulators like the SEC could be a game changer for the crypto industry. But what really does this mean? Essentially, reducing stringent regulations can foster an environment where technological innovation in areas like artificial intelligence and digital assets can thrive. Now, Cathie Wood believes that this regulatory shift is likely to turbocharge the US economy, making it a hotspot for crypto innovation and investments. Moreover, with regulatory clarity, more institutional investors will feel confident about entering the crypto space, further boosting demand and consequently prices. This anticipated regulatory easing is a beacon of hope for many in the crypto community, signaling a more stable and supportive environment for growth. But let's explore what this means to consider Bitcoin as a new asset class. Now, Cathie Wood mentioned that Bitcoin is behaving differently from other assets, which is a significant factor for asset allocators. In traditional portfolios, diversification is key, right, to kind of managing your risk. But Bitcoin offers a unique risk return profile, which doesn't necessarily correlate with stocks, bonds, or even real estate. This non-correlation means that Bitcoin can serve as a hedge against traditional market volatility. For investors, including Bitcoin in their portfolios can potentially enhance returns and reduce overall risk. As more institutions recognize these benefits, we expect an increase in demand for Bitcoin, driving its price even higher. Now, historically, new asset classes often undergo phases of skepticism before achieving widespread acceptance. Bitcoin is currently going through or is in that transformative phase, and with support from influential investors like Cathie Wood, its adoption is set to accelerate. Now, let's talk about on-chain analytics as well and what they're telling us about Bitcoin's bull market. On November 16th, Cathie Wood highlighted in a post that Bitcoin's halving in April, the growth in Bitcoin's supply dropped to 0.9%, which is below the long-term growth rate of gold. This reduced supply growth indicates scarcity, a fundamental factor that can drive up prices as demand remains steady and increases. Additionally, on-chain analytics show strong accumulation by long-term holders, suggesting confidence in Bitcoin's future. With these indicators pointing towards a robust bull market, many analysts, including Cathie Wood, are optimistic about Bitcoin's sustained growth. However, as always, it's essential to stay informed and curious, and I say curious, but cautious and curiously optimistic, as the crypto market can be highly volatile. So there you have it, right? So Bitcoin is not just reaching new heights, but it's poised for even greater growth, thanks to its visionary investors like Cathie Wood, favorable regulatory changes, and its emergence as a new asset class. But what do you think about all of these developments? Are you bullish on Bitcoin's future? Let me know in the comments down below. Imagine Bitcoin hitting a price ceiling of $135,000. Sounds pretty incredible, right? Well, that's exactly what the CEO and founder of crypto Quant is predicting. In his latest quantitative analysis, he has kind of revised his earlier forecast, setting a new Bitcoin price ceiling of $135,000 with a 2024 target of $112,000. This optimistic projection is backed by significant capital inflows into the Bitcoin market, including investments from exchange-traded funds and other financial products. Now, analysts are buzzing with predictions ranging from $140,000 all the way up to $500,000 during the current market cycle. But the CEO of Crypto Quant adds a word of caution. While the long-term outlook is insanely bullish, the future perpetuals market is currently over-leveraged by about 2.7 times more than in early 2024. And what does this mean for you? Well, essentially, while holding Bitcoin long term could be rewarding, trading with high leverage might expose you to very significant risks. So if you're a trader, it might be wise to stay bullish but tread carefully with leveraged positions. What do we think, what do you think, I should say, about these ambitious price targets? You can let me know in the comments down below. But here's a question for you, as a viewer of this video and as a potential crypto investor. Are you long-term Bitcoin holders cashing in their profits? Let me know. According to Crypto Quant contributors, some long-term holders are indeed taking profits at around the $90,000 mark. And if you're in the Discord, you will know exactly what Chris, myself, and the Cheeky Crypto team are doing in terms of taking profits. Now, they do point out that this specific group who've held Bitcoin for 155 days or longer aren't representative of all long-term holders. In fact, he anticipates that more of these investors will hold out for even greater profits. Using realized price UTXO bands, it's evident that these holders aren't satisfied with 90K. They're aiming much higher, targeting prices that could realize profits exceeding 10x their investment. This behavior indicates strong confidence among long-term investors, suggesting that Bitcoin still has significant room to grow. Are you holding Bitcoin for the long haul, or are you considering taking profits? Share your thoughts with us in the comments down below. But it's not all smooth sailing either. Another Crypto Quant contributor predicts a possible Bitcoin price correction down to $70,000 on its way to the $100,000 mark. This suggests that while the overall trend remains bullish, we might see some volatility and pullbacks along the way. However, not all analysts are on the same page. Some believe that a deep correction can be avoided if Bitcoin maintains its price above the $85,000 level in the upcoming weeks and months. Now, I will go into my own technical analysis at the end of this video, and I'll be sharing my thoughts and opinions as to where I think that price is going, so do stick around for that. But here's the big question. Will Bitcoin experience a significant correction, or will it continue its upward trajectory smoothly? Keep an eye on these support levels because it could be crucial for predicting the next big move. What's your take on this? Do you think that we'll see a correction, or is Bitcoin set to keep on climbing? We've seen 𝗕𝗚𝗙𝗏 CEO set some pretty ambitious price ceilings for Bitcoin at $135,000, backed by some strong capital inflows. Meanwhile, long-term holders are showing confidence in Bitcoin's potential for substantial profits, and there are mixed opinions as to whether or not a price correction is coming in the near future, right? Now, the crypto market is always evolving, and staying informed is your best strategy for navigating these ups and these downs. Personally, I'm excited to see where Bitcoin heads next, whether it's pushing towards new heights or navigating some turbulence along the way. Let's go ahead and jump down into the desktop and take a look at my technical analysis on where I think the price is heading next. Okay, so here we have Bitcoin paired up with USDT. We're on the 1-day Binance chart, and you can see a pretty nice run to the upside. Okay, we can see this kind of playing out very, very nicely at the moment. This is a really strong move for Bitcoin, and it is showing some more strength actually right now as well. So I do see us actually pushing up into a new all-time high before having any kind of major correction. Now, I do think that we are going to have a correction, and I'm going to show you why I think that in a moment, but we can still see some pretty decent price growth potentially on the horizon here for Bitcoin. So let's go ahead and take a look at this in a little bit more detail. So we can see that we had a low. This was actually back here. I actually thought we were going to double test this, or double bottom test at the $49,000. That was the 5th of August. From here, we have a 3-wave move to the upside. Again, it's a pretty standard 3-wave move. 3-wave move to the downside. Then we start to really get into some explosive moves here. A 5-wave move, another 5-wave move, but it's still ultimately still a 3-wave structure. So we actually have a 3-wave structure complete here with a correction to the downside. We then have a 5-wave move followed by this 5-wave move. So to me, it looks like we have a kind of 3-3-5 structure going on. Okay, so what does that mean? Well, it means that this is a great move for Bitcoin, but it's not indicative of kind of complete structures. Now, we can still push out higher, and if we do move out towards the 1.618 at $96,830, then that's going to be a really interesting spot for Bitcoin to kind of go into. Now, taking a look at our structures, is it possible that I've miscalculated something over this side? It definitely would be possible that maybe we have some kind of contracting diagonal here that's leading us into this more bigger explosive move, and maybe this is just an overextension that I'm seeing as a kind of a 3-3-5 structure. Maybe the whole thing is impulsive. Now, it would make sense for it to be impulsive based on our corrections from over this side here. So with everything that was leading us up into the early 2024 runs, we can see here that our expectations to finish off this structure was 81,257 to 95,006, and that's obviously using this low point. We're actually hoping back then to actually see a little bit lower so that we could push up higher, but the market's looking good, and if we are right about some of these contracting diagonal potentials, then this could actually explode up quite significantly. So let's go ahead and take a look at this structure in a little bit more detail. Okay, so we have a great 5-wave move here. We then have a 1, 2, 3. We're looking at a 4th wave move at the moment with a final 5th wave up a little bit higher. Let me show you what I'm seeing. So here we have a wave 1, a wave 2, a wave 3, a wave 4 is where we are at the moment, and we're looking for that next move upwards. That's all a part of a bigger kind of structure that looks more like this. We have a wave 1, a wave 2, a wave 3, 4, and 5. And then if we are correct about this structure also playing its key role, then we'll be looking for another nest in here, a 1, a 2, all of that being 3, 4, and then 5. And if we are right about contracting, which if we go ahead and actually do some sense checks, there's a couple of rules with these things that we need to check. Okay, so we have this initial surge here. I'm going to just take this to a 4-hour time frame briefly, actually, just so that I can see that initial kind of run from down here, just to see where things actually were. So we have 3 waves here, we have 3 waves here. It doesn't really give me that kind of idea that there is a bigger kind of move, but we can see we did come down, so we bounced up, we pushed down, so we could argue 1, 2, 3, 4, sorry, 1, 2, 3, 4, and 5, and actually in an expanding diagonal. Okay, for that to make sense, we take this measurement, we move that over here, we can see that wave 1 is bigger than wave 3 is bigger than wave 1, which is exactly what you'd want. You'd measure your wave 3 and move that over here, and it's not, it's actually larger, so it doesn't really make sense for that to be the case. So we'll stick with the 335, I think, as the kind of premise for what is potentially going on there. So coming back into our chart then, it would basically be the idea here that we don't have this one, we only have this, we have 3 waves up, 3 waves down, and then we start nesting inside of this. So what does this mean for Bitcoin? Well, it means that we are still in bullish times, but we should expect a fair amount of volatility, specifically in these higher ranges as we kind of go into the finishing structures of wave 3s and 5s and things so forth, right? So inside here, we have a very interesting structure. I will bring this to a 4-hour time frame once again, just so we can monitor this current situation that we find ourselves in here. Very interesting moves going on, very corrective move here, and we will be looking for a move to the upside. Let's do the due diligence because it's very important that we do make sure that we are on the same page. Here we have a very typical 1-to-1, not a problem. So that's a 3-wave correction finishing off right here, 1, 2, and 3 like that, A, B, and C. We then have a very interesting move to the upside. I'm going to take this to a 1 hour just so that I can see those internal candlesticks with this particular move here. 1, 2, 3, 4, and 5. 5 should be bigger than 1. Let me go ahead and check. I'm just going to check to make sure that we are all correct. Yep, it is bigger than 1. So here we have an expanding diagonal coming in like this. Okay, expanding out. This is in the pattern of a wave 1, 2, 3, 4, and 5. Rules for this are quite simple. I've been through these quite a bit actually recently. Wave 3 cannot be the shortest wave. Okay, wave 1 must be the shortest wave. Wave 5 must be the longest wave. Wave 2 does not retrace deeper than origin, and wave 4 does not retrace deeper than wave 2. But wave 4 is allowed to intersect with wave 1. Okay, so it follows all the rules. And again, this can be a bunch of 3-wave structures internally. Doesn't have to be 5-wave structures. So we're looking pretty good there. Okay, now taking a look at this next kind of structure here for the move to the downside, if I can grab the correct tool, mouse not working today, we can see here we've already come down to the area of retracement and be bounced up quite significantly. So we're looking good. We're not looking to break that low. I don't think there's a need, and there's a possible scenario here for it to do so, but I don't think there's an exact need for it. So why is all this important? Well, if I come back to our daily chart, that means that we're starting the ascent into the 5th wave movement. Okay, so that's why that's really important. Now, if we take this measurement, our target here is a new all-time high. Are you ready for the biggest trading competition of the year? Blowfin is bringing you the chance to dive into a massive prize pool of up to $1 million. This is your chance to win big while trading your favorite cryptocurrencies, but you need to act fast and sign up using the special link in the description. Blowfin's latest trading competition offers a total prize pool of up to $1 million, and it's packed with rewards for both team and individual traders. Whether you love competing in teams or prefer to go solo, there are plenty of ways to win. The event is broken down into exciting competitions like team trading volume, team P&Ls, individual trading volume, and individual P&L percentages, so there's something for everyone. Here's what you need to do to get started. Step 1. Register for the event using the special link in the description before November 21st, 1200 hours UTC. Step 2. Start trading during the competition period, which runs between November 12th and December 12th at 1200 hours UTC. Step 3. Compete in team challenges or individual contests and rank for your share of that $1 million prize pool. Let's break it down quickly. 40% of the prize pool is allocated to the top teams by trading volume. 35% goes to the teams by P&L percentage, that's profit and loss percentage. 15% is set aside for the top individual traders by volume, and the remaining 10% is for individual P&L percentage winners. winners. To join the team competitions, your team must have at least 10 members, including the captain. But don't worry, if you use the link in the description down below, you can join the Cheeky Crypto team, and we already have more than 10 members, so don't worry. You can still participate in the individual competitions as well. Keep in mind that each user needs at least 10,000 USDT in trading volume to qualify for rewards. That sounds like a lot, but it's actually a lot easier to achieve 10,000 USDT in trading volume than you might believe. Worth checking it out. Now, don't miss out on this incredible chance to win a share of that $1 million. Click the link in the description below to sign up, join the competition, and start trading today. Remember, registration ends on November 21st, so don't wait too long. This trading competition is brought to you by Blowfin. It is not affiliated with Cheeky Crypto or YouTube in any way, shape, or form. It is solely the responsibility of Blowfin. All terms and conditions can be found on the Blowfin website using the link in the description down below. The new all-time high for Bitcoin for that final fifth wave move is 94,894 to 97,591. That may take a week or so. I don't know the timing on it. Once complete, we'll look for another moment of turbulence. We'll drop back down. We'll probably come back down into this area that we had scoped out for retracement, somewhere between 83 and 88, before having another shot at $100,000. I do think we are likely to hit $100,000 before the end of the year. I do think that's the most probable scenario here, and then we'll be looking for another retracement. That retracement might be a lot more significant. After completing this kind of pattern to the upside, it is something that we need to be aware of. Now, let's take a look at a few indicators. On the daily chart, we have just come out of the overbought area. We will be looking for some more volatility here on the stochastic RSI, so I don't think we're necessarily finished just yet. You can also see the weekly will be looking for a correction as well into next year, in my opinion. Now, if we turn that off and bring in the relative strength index, we are overbought as well, so momentum is high, and we will be looking for momentum to start shifting around. Our MACD histogram has printed quite amazingly well, and as we've had this correction, it has pulled back a bit. And we were looking for a breakout from our histogram here on that MACD. We can see here that momentum was basically winding up into a really good strong point where we were looking for a breakout or a breakdown. We thought a breakout based on the movements of, the actual US election and the outcome of that. We were thinking that it was more than likely going to be a break to the upside and everything that was going on there. So everything for Bitcoin's played out quite nicely. I do see a new all-time high here before the end of the year, and it does to me look like a really, really strong move has kind of played out here. A 335 upwards, 3 down, 3 waves up, 3 waves down, 5 explosive moves to the upside. And again, we are looking at tracking this as a final kind of move to that $100,000 before the end of the year. A correction could then follow, whether that's going to be, February, April, May, who knows, right? I can't time the market, but we do see a move upwards into our kind of higher range expectation between 101 and 118. But I still see the potential for 135 as that's going to be testing out this line. Now, if I bring this to a weekly time frame, what are we talking about here? Well, if you connect the previous bull market peaks, okay, over the years, you can see here that this kind of projects out as time progresses, as we go into 2025, the potential for this to kind of be out there towards kind of $135,000 or so. Go ahead and just pull this back in line. Here you can see that if we do have a Q4 kind of finishing bull market, as we have done historically, we could be bordering $135,000 to $140,000 for BTC. Okay, historically speaking, every bull market, and I'll bring this up on the chart as well for you guys. Every bull market has peaked in Q4 for Bitcoin. Okay, so every previous cycle, so if we go all the way back here into our 2012, 2013, 2013 bull market peak was Q4. Our 2017 bull market peak was Q4. Actually, it was November, and then it was December. Our 2021 bull market peak was in November, Q4, and of course, we'll be looking for that coming up into the slightly higher range, around $135,000 here, for BTC to kind of have its bull market peak Q4. That would be the expectation. Of course, all of this is just using historical data, and history can change, but for now, it's looking very strong for BTC, in my humble opinion. But of course, that's all it is, just my my thoughts and opinions on the data in the charts as I see it. What do you think? Let me know in the comments down below, or join us in our free Discord server and we can continue the conversations down there. If you found this video helpful and informative, smash the like button. If you're new to the channel, subscribe. And if you haven't done so already, check this video out right here. It's not one that you want to miss.